Asset Management. We asked him for his views on the market. Take a look.
There are internal and, as I call it, micro elements, and there is macro, and then there is the external element. I think today what we are seeing is probably a combination of all of these things not going in one direction. So for you to generate a bull market, you need all of these signals in one direction. So while we have currently very strong positive data on GDP coming from the US, positive data on unemployment coming from the US, positive data on capex coming from generally some sectors in India as well, and the earnings growth story. So it is about which part of the world do you see is the glass half full or half empty. I would think that the macro does have an element to where the markets move in the short term. But I think if you're a long-term investor, I think the positive signs are the continuing growth in earnings and the sustainable economic upturn that we can yet see forming in the next few months in India.
Nevertheless, Tushar, I'm sure that you all would be having some morning meetings with the HSBC Brains Trust globally around the world. What's the received wisdom from them? Are they expecting the currency turmoil to continue?
Well, actually, if you recall, the think tank within HSBC had mentioned earlier this year that the year 2017 was the year close to Goldilocks. And this year we expected it to be Goldilocks, but not as much. So there was a slight degradation in terms of the positives. I think that is something of a view they continue to hold. What they are also indicating that the interest rate rise in the US, which was something which was bothering a lot of people at the start of the year, is going to remain fairly gradual. And I think that's something which is probably going to play out. The GDP growth rate in the US continues to be pretty strong. So I think there are pockets of pretty strong economic growth in the world, but they are not synchronized. So earlier in 2017, there was a pretty synchronized growth phase across all economies. But I think what we've seen is in the US, in Euro, and some parts of Asia as well, there is pretty strong growth. But it's countered by all of these situations leading from the higher price of oil and some sort of pressure that puts into some economies which rely on oil as a large part of their economic growth. So I think when you look at all of that together, it's more or less in line with what we had thought of at the start of the year, that this is going to be a little more challenging year than last year. Okay. But on balance, from a corporate perspective, pretty positive.
What about market positioning in individual sectors? At the peak, financials accounted for almost 39% of the index, and IT was down to almost 10-11. I was just looking at the data now. It's almost 35-15 now. Your sense on whether we would see some more rebalancing?
Yeah, I think clearly the IT sector is getting a pretty strong tailwind from the weakness in the rupee. And on top of that, we have seen pretty positive sentiments coming out of the US, which is the largest client area for Indian IT. Anything which leads to strength in revenues because of a lower or a weaker currency is something which we think will continue to do well. And surprisingly, Indian metal manufacturers or companies in the material sector actually also do benefit from a lower rupee.
Tushar, any thoughts on how to approach this entire pocket, the NBFC lot? Some of them have lost a bit of sheen, the larger ones like Bajaj Finance. There's a lot of talk of competition, disruption, etc. But do you think there's still money to be made in this pocket? There's
microfinance, there is general housing, there is affordable housing, there is... I mean, if you bunch all of that into NBFCs, it's very difficult to take a call on NBFCs as a lot. But I think if one tries to be a little more granular, you will find that there is plenty of opportunities even now.
What about metals? Do you think that the best is over for them, Tushar?
Well, I think metals have gone through a little bit of a cycle. So in 2017, we saw the first flush of prices going up after many years, and then they benefited out of the margins that they saw. Beginning of the year, we saw a tempering of those prices, and they were not really making as much money as they were making last year. But as the year goes by, I think especially domestic global metal companies should definitely benefit.